Hi guys, welcome to the Savvy Money Show with me, your host Sean. Today we're looking at stocks I'm looking into over the week, the UK and US. We're going to start with Biotech. It's a couple of dollars down on the week. Why are we looking into it? Well, it's just received emergency use for its COVID treatment in the US and EU, and they're looking to get it okayed for India, which I don't think will be a problem. And if you look at their financials, the current assets outweigh their total liabilities by 2 to 1. Now the cash outweighs their total liabilities. Now, granted, their market cap is above enterprise value and the price of sales is very high, but it is a biotech company and they have only just got the emergency use, so you've got to give it time. Now, UK stock, one I spoke about last year, best of the best. Why is this so good? Again, the enterprise value is below market cap and the price of sales is higher because it's all about sales. But they've had a huge increase in their income. Their margins have improved. You know, they've cut their liabilities, and now, although this says 3.5 million, it's now they're showing no debt on board and 11 million cash on hand. The good thing about it is the dividend, as small as it is, 0.12%, and remember, likes of Microsoft, likes of Apple, their dividend is small. That's not why you own it. Their dividend payout ratio is 4%. So at any moment, they could jump that up to 20%. Or think what would happen to the share price then. Once the share price stabilises, they could start jumping that up in increments. Now, if they don't want to, that's fine. I could also see them making some acquisitions or building a bigger moat. Now, USX Express, they're a trucking company, but they're classed like the Uber of trucks. They've just recently gone into profitability, 20 PE, just under 20 PE, sorry. And because they have an AI built on their platform, and market cap is half their enterprise value. Their forward PE is 8.65. The price to sales is 0.32. And I think this is a great company to look at. And going forward, I think this is going to be a good company to pick up. Now, if you look at the total liabilities, it's covered by total assets. The current assets doesn't cover the current liabilities, but it shouldn't be an issue. And I spoke about that in my Discord, where you see there how I think it's got good value. Now, PAE Incorporate. The thing about my Discord is I can let you know as soon as I know, and whereas with the videos I have to find time to record them. I try to get them out as often as possible, but you see here again, market cap is 1 billion less than the enterprise value, forward PE of 10, price to sales of 0.27. Now, this is half. If you remember, I spoke about Victrex going next dividend next week. Now this is half the price to sales are there. Now we will see that the current liability is covered by the current assets and total liability is covered by total assets. Now, don't forget to hit that lovely like button, and don't forget the sexy subscribe button. A lot sexier than me, just ask the wife. And if you want to be a hero, hit the bell notification. You'll be notified when a new video gets uploaded. And why not check out the links in the description below. If you're looking for a free trading platform, you get a free share worth up to $200, depending on the platform you use if you deposit a small amount. Next Resources gives a 2.5% dividend. It's a zinc mining company. It's had a 37% growth over the last year. Market cap is 1.42 billion against the enterprise value of 2.58 billion. Forward PE of 8.5. Price to sales of 0.67. Price to book of 1.08. Now we're going to look at financials, and you're going to see total liabilities covered by total assets, and current liabilities covered by current assets, and covered by total cash as well. I think this is a good company to look at, and now we have a new SPAC on Tuesday. Well, today we have Virtuoso Acquisition Core, still under $10, with Quidco. Now this is backed by, piped by Palantir. Why? Because it's a car data company, and to tell the truth, there have been some people speaking about the valuation of it, but it does have a large amount of well-known customers, and I do believe that this is going to be a good one. However, please do your own due diligence, and I think it's still low enough to bring enough to the game, but I suggest you look at the presentation, and I'll see you in the next video. That's all for now.
Thank you for joining. Out of all the companies that we've looked at, we think Quidco has the best opportunity for our investors and pipe investors to make multiples on their capital. I couldn't be more proud to introduce you to our partners at Quidco. You will hear from Quidco's visionary founder and CEO Richard Barlow, CFO John Maxwell, and Sarah Larner, head of sales and partnerships. You will also hear from Sam Hendel, a Virtuoso board member, and importantly for this process, a co-founder of Dataminer, which just completed a raise at $4.1 billion post-money valuation. Sam's experience with Dataminer is highly relevant to Quidco's opportunity. Existing shareholders are standing beside us, enrolling 100% of their equity. The transaction is being funded with $230 million Virtuoso cash and trust and the $100 million pipe we're raising. This transaction fully funds the business plan that the team will walk you through. Quidco is just a terrific fit with Virtuoso strategy. We have great chemistry, kind of love at first sight, and really relevant and complementary expertise. Without further ado, let me turn it over.
Basically, you can look at it at your own leisure. I'll see you.